Hey guys, in this video, I'll explain how to improve your credit score fast. When I returned home to New York after 7 years in Japan, my credit score was awful because I had no credit history. I was really frustrated with this because I was a responsible spender while I was in Japan, but that wasn't recorded into the US credit score system. After accepting this, I spent a lot of time studying how I could increase it in the fastest, most efficient way possible, and I want to share all that I learned with you. So be sure to watch this video all the way through, implement these tips, and someday you may hit that oh so coveted 800 plus credit score. Having a high credit score is important because it will grant you access to more favorable lending terms, such as a higher chance of getting approved for a credit card, whether that's a cashback card or a travel rewards card that you want. Your credit score also directly affects the interest rates that you qualify for on loans such as a home mortgage or auto loan or even personal loans, which determines the total amount of interest fees that you'll pay over the life of these loans. Before I get into how to increase your score, you need to have a good understanding of what a FICO score is. A FICO score is just the official term for a credit score, and these are the factors that determine it. 35% payment history, 30% amounts owed, 15% credit age, 10% new credit, and 10% credit mix. Most of these are self-explanatory, but let's review. Payment history is affected by how well or poorly you pay off your credit. Amounts owed is how much credit you're using or how much debt you owe. Credit age is the average age of all of your credit lines. New credit looks at how recently you've opened new lines of credit and when. And credit mix looks at the diversity in your types of credit. Credit cards, auto loans, home loans, personal loans, etc., etc. Now, the first easiest and quickest method to increase your credit score is to be added as an authorized user on someone else's credit card. This could be your parents, a partner, or a trusted friend. Now, I realize not everyone can do this, but if you know someone with a good credit score who you trust and who trusts you, being added to their line of credit can significantly boost your credit score. There are two caveats to this strategy, which are that an authorized user who is added to the credit card can negatively impact the credit score of the primary cardholder if the person does not use the card responsibly. If the primary cardholder has a bad or the same credit score as you, your score won't increase because by being an authorized user on their credit card, you will be associated with them and their credit history. If you can, I would highly recommend doing this, as my partner did and boosted her score from 650 all the way up to 730 in less than 4 months. To do this, the primary cardholder must add you as an authorized user by calling up their credit card issuer, and most credit cards will allow this. In fact, some of them even let you do it online. Now, if you don't have anyone who can add you as an authorized user, it's not the end of the world, as there are many other ways to build your credit, but you'll want to start by applying for your first credit card. Some cards like Discover It Student Cashback, Discover It Cashback, or Capital One Platinum are good starter cards. But if you can't get approved for a credit card right now, you can start with something called a secured credit card. Anyone with verifiable income can sign up for a secured credit card, and when you do, you give the card issuer a security deposit for the amount of credit that you would like to have. So if your security deposit is $100, then your credit limit would be $100. Under most circumstances, banks are always willing to extend credit through a secured credit card because they hold your security deposit as collateral for your debts. A secured card is excellent for those with no credit history, as you will build good credit history each month you use the card responsibly, which will increase your score and allow you to get more lucrative cards later on. Remember that your payment history makes up 35% of your score, and this will have the largest impact on your credit, so it's vital to pay off all of your credit cards in full every single month. It's very easy to do this nowadays, as most cards offer an auto pay feature, which lets you pay off your balance automatically every month by linking a bank account. And if a credit card doesn't offer auto pay, run away as fast as you can, because that is a huge red flag. If you don't pay down your balances, this can lead to dips in your score, extra interest and late fees, and hurt your chances of qualifying for 0% intra-APR offers from new credit cards. Check your last possible payment date of each card and make sure you're paying off that card by that date every month. It's pretty simple to prevent missed or late payments with autopay features, but it's also easy to forget to set it up. And if you miss 1 or 2 payments, your score will take a massive hit. So the key is to set it and forget it when it comes to credit card payments. The next step is to create multiple lines of credit. Now that you've built up some credit history and made on-time payments, your next move should be to open up multiple new credit cards. You want to do this because the more credit cards you have, the higher your total credit limit will be. For example, if I have a credit card with a limit of $2,000 and then I open a new card which grants me a limit of $6,000, then I have a total credit limit of $8,000. Having a higher total credit limit increases your score because lenders will see that you are responsibly paying off multiple credit cards at a time. Having a higher limit also makes it easier to maintain under a 30% credit utilization rate, which I'll talk more about later. Now, your score might dip a bit each time you open a new card, but that's only because the new card is decreasing your credit's average age and it counts as new credit. But don't worry, this dip is only temporary. Getting more credit cards will increase your score, but another factor is your credit mix. Having a good credit mix helps because it shows lenders that you have made responsible on-time payments on several types of loans. And this makes sense if you think about it. If I were to loan someone money, would I prefer to loan to someone who has multiple credit cards, an auto loan, and a home loan, or someone who just has multiple credit cards? Assuming both of them have good payment history, it makes sense to see the person with different types of credit as more trustworthy, and this is how lenders see it as well. Number 6 is you want to be strategic about the timing of applying for new credit, and you don't want to be opening new credit too often. Opening multiple new lines of credit in a short time frame can ding your credit score because every time you apply for new credit, the lender will run something called a hard inquiry or a hard pull on your credit report to check if you qualify for the credit. This means if you have a bunch of credit inquiries on your report, that each one will lower your credit score and lenders will see you as a riskier borrower. They think if Evan is applying for 3 credit cards, a home loan, and an auto loan all at the same time, then this means he must be in financial trouble, and that's why he wants to borrow all of this money at once. Even if that's not the case and I just want to build my credit fast, that's just how the lenders see it. So it's generally a good idea to wait on getting new credit if you want to keep your score as high as possible in the short term. If you want to buy a house or finance a new car in the near future, wait until after that purchase to open a new card. This is because when making these purchases, your credit score directly affects the interest rates you qualify for, which means you'll pay way more over the life of the loan the lower your score is. New credit will temporarily lower your score in the short term, but it will help it grow in the long term. So if you still have a card that you want to open, I would do so every 3 to 6 months, but just don't apply for credit right before a big life purchase. Tip number 7 is to keep your credit utilization rate under 30%, or if you can manage it, ideally under 10%. What this means is you should not be using more than 30% of your total credit limit before paying it off. If you use more than 30% of your credit limit, lenders will see you as a riskier borrower because in their eyes, there is no good reason to be borrowing such a high percentage of your total credit limit on a single or multiple cards. In the short term, this means you can actually really boost your credit score by keeping your utilization under 10%. As an example, this means you shouldn't use more than $100 if your total credit limit is $1,000. There are multiple ways to increase your utilization without affecting your score. One is to open more credit cards to increase your total limit and call your existing card companies to increase those cards' limits. The second is to spread out your charges across different cards if you can, although this doesn't always apply as some credit scoring models look at your credit utilization in relation to the total credit limit across all of your cards. The third is that if you need to use a credit card for a big purchase that would put you over the 30% credit utilization rate, then you could manually pay down the card during that month in order to keep the balance low. So I highly recommend never going over that 30% utilization, but if you have to, remember to pay down the balance so that you can continue to spend on that card and show lenders that you are a good borrower. Worst case, if you have 1 month where you go above 30%, but you go back down below it the next month, your score will pop up again. Tip number 8 is to check your credit report for errors. A really great resource for this is annualcreditreport.com, where you can receive reports from each of the 3 credit reporting bureaus for free once a year. And as of the posting of this video, they are offering free reports every week. Sometimes there can be errors on your report through no fault of your own, but leaving these errors there can drag your score down without you knowing. For example, the most common mistakes that are current include missing accounts, accounts being reported more than once, and reports indicating that the closed accounts were closed by the grantor and not the user. When accounts are being reported more than once, it looks like you have higher debt than you actually do, which affects your credit score. If you see anything that is incorrect on your credit reports, call the credit bureau and the card issuer that provided the information to the bureau and dispute it. Under the Fair Credit Reporting Act, if the error is legitimate, then they are legally obligated to correct it. If you do successfully resolve any errors on your credit reports, you can recover any points lost and significantly increase your score. In my case, one of the first cards I opened was actually closed by the grantor, and this lowered my score. Tip number 9 is something I mentioned earlier, but it's also something that many people forget to do when trying to raise their scores, and that is to simply call up your credit card company and ask them to increase your credit limits. Now, in some cases, asking for a credit limit increase will trigger a hard inquiry on your credit report, which can hurt your score. But if you call your credit card issuer, you can ask if the request would trigger a hard inquiry. Sometimes you can take a smaller increase and avoid the hard pull, effectively increasing your total credit limit, but with no dings to your credit. Making these requests gets easier as you build a relationship with the company. For example, if you have multiple accounts with Chase and you have a decent credit history with them, you are more likely to get approved for a credit limit increase. You can do this on all of your cards, and the best cards to do this first for would be the cards you have the most spending on. By increasing your total limit on the card with the most spending, you'll increase the likelihood of staying under a 30% credit utilization rate across all of your cards. You also might find it easier to get credit limit increases for cards that you've held the longest. By now, you probably understand that there is no magic bullet to increasing your credit score, but it's a long-term game. But what if your score is terrible and you need to boost it for an upcoming purchase like a car, a home, or you applied for a credit card that you really wanted, but you couldn't get approved for it? Well, when I moved back to New York, my score was 633, and while I found all of the strategies I mentioned earlier useful, I also found paid services that can help. I used Self-Inc, a self-lending service that allows you to create an installment loan against yourself, which gets reported to the credit bureaus and allows you to establish a positive payment history while also getting you in the habit of saving money. At the end of the loan, I established a good credit history, and the money in my loan account was returned to me minus taxes and fees. I used this service to boost my 633 score up to 725 by the end of my self-loan period, and this enabled me to get my first unsecured credit card. I'll leave a link in the description so you can sign up if it makes sense for you. Okay, so that was 10 different strategies you can use to get that coveted 800 plus credit score. Credit is so important to your financial health as it directly affects how much you pay in fees and interest anytime you want to borrow money. As I mentioned earlier, there are ways to boost your credit score in the short term, but it's more of a marathon than a sprint, so I really want you guys to take notes, save this video, and come back to it anytime you need a refresher. I've used all of these strategies at least once to significantly improve my credit score, but you don't have to apply all of them. Just implement what works best for you and your situation. I hope that you got a lot out of this video, and I want you all to have the best credit scores possible so you can use your savings on more meaningful things. If you enjoyed the video, please leave a like, a comment down below, and share it with your community. I'll be making more videos about personal finance and investing, so if that's interesting to you, subscribe for more content like this. Thanks again for watching, and see you next time.